Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope everybody's having a great weekend. This is the last weekly Forex forecast of 2022, as next Saturday is Christmas Eve and the following Saturday is New Year's Eve. So we will be back on January the 7th, 2023 with a new weekly Forex forecast. But for now, heading into next week, there are some major risk-off signals we need to be paying attention to. So if we start by looking at the ACWI, which is the Global Equity Index. Now, why would we start by looking at this when we're looking at a weekly Forex forecast? Well, because what's happening in global equities is going to drive what you're going to see in the Forex markets. Because as equities sell off, if we start to see risk off returning into equities, as it looks like is going to be the case in all probabilities, this is going to drive risk off in the Forex markets. And this is why going into next week, you can see in the ACWI, the Global Equity Index, we have broken a head and shoulders reversal in a downtrend. We failed to actually make a new high. And now this market, in all probability, is heading back to the lows, at least, if not further. As that happens, this will almost certainly force risk-off actions from Forex participants. So you would expect to see the Japanese yen appreciating in value, the Swiss franc, and also the US dollar. The US dollar is not quite there, but I do think next week we see a reversal in the dollar, and I do think we're looking at the bottom in the dollar index, as we're going to see in today's video. But you have to take note, even if you're just trading Forex, in what's happening with equities globally, because this is just one of many signs that risk off is going to be coming into the markets in the near term. A quick look at the economic calendar shows us we have an interest rate decision out of Japan next week, so don't be surprised if the yen pairs get a bit volatile on Tuesday. But the big fundamental events came last week, and they were, first and foremost, US CPI, which came out better than expected. Then we had the Fed on Wednesday and we had the ECB on Thursday. Now, these were really important events last week because they're giving you an idea of what's coming next fundamentally. First and foremost, we had CPI, which came out better than expected. And considering this entire tightening regime monetary policy in the US has been about higher inflation, we failed to get a sustained rally in the S&P 500 last week. And as you've seen with the ACWI Global Equities Index and also with US stocks and other stocks, they actually reversed and sold off after this. So if a better than expected CPI reading out of the US cannot rally stocks, it's very difficult to see what the catalyst is going to be to drive stocks higher, especially since the entire regime is currently about inflation. Second, we had FOMC on Wednesday. On top of this, the Fed did not come out dovish on Wednesday. They came out and stated that the terminal rate was going higher and that in future press conferences, you could see the terminal rate, in other words, the highest, the peak of interest rates, going even higher. And it's my belief, and it has been for a while, and I've been saying this to GMT members, that we are going to see a higher terminal rate. Now, this was important because it gave the message that the Fed is not going to ease monetary policy in any significant way, over and above just slightly slowing the pace of rate hikes. This was a hawkish meeting, and what this led to was the ECB coming out on Thursday and also being hawkish. However, the big takeaway from the ECB meeting on Thursday, which is very important, is that the ECB projects the EU economy to go into recession over the next couple of quarters. And Lagarde even said that that could be this quarter already. She said the turn of the year, Q4, potentially Q1, and we're in Q4. So what the ECB is saying is that the EU may already be in recession and is expected to have negative GDP over the next couple of quarters. Now, if that's the case, this has real fundamental implications because we've just seen Jerome Powell stating that he is not going to be pivoting anytime soon. However, if the euro area goes into recession in the near term, this is almost certainly going to force the ECB to start to cut rates before the Fed because the US economy is doing much better than the EU economy. And if that's the case, fundamentally, this is going to put downward pressure on euro dollar over the next few quarters. So big events last week with fundamental implications that as traders, we really need to be thinking about 3 to 6 months out. Okay, so let's have a look at the scores for the coming week. And last week was a fantastic trading week, despite the fact we had lots of events going on. There were tons of opportunities last week. And the Canadian dollar has been highlighted as the best Forex play to the downside, and we've had really good sell-offs in the Canadian dollar. Last week, it just kind of corrected a little bit, but it is still highlighted as one of the best shorts. Alongside that, going into this week is the Australian dollar still. So really the two commodity currencies we looked at last week as best shorts are once again best shorts heading into this week. But the big takeaway from last week is the change in scores, because the US dollar has gone from -1 to 0 for the first time in the major scorecards. And the euro also has increased its probability score. And what this means is, at the same time, by the way, as the Swiss franc, and the New Zealand has slightly weakened. So what we have here is we have the US dollar, which is a risk-off currency, slightly increasing its score and going out of the negative side to the neutral side. And the euro increasing its score from 2 to 3. Now the euro itself, compared to the yen, the dollar, and the Swiss franc, is not a risk-off currency. But in a risk-off environment, the euro will appreciate against the New Zealand dollar, the Australian dollar, the Canadian dollar, and also the pound. So what we're actually seeing here is we're seeing a projection of risk off in the probabilities for the majors over the next 4 weeks on a rolling basis. And alongside that, we also have the New Zealand dollar, which has actually been the strongest commodity currency recently, now starting to weaken. So when you put all of this together, going into next week, I do favor really only the markets that are standing to benefit in a risk-off environment, because if we start to get a quicker sell-off or an increased sell-off in the stock market, this will bring risk off, and it is the risk-off pairs that will be performing the best. And at the very least, if the risk from global equities, from US equities and also EU equities, including the UK equity index, if the risk is for a bigger risk-off move, at the very least, we don't want to be on the wrong side of that. And that is the risk of getting involved with risk on pairs as equities are starting to break down. You risk being on the wrong side of a bigger risk off move. Okay, so quick look at the individual currencies, starting with the dollar index. Now the dollar index, you can see, is really lacking momentum, and we have these choppy 1, 2, 3, 4, 5 waves down. And this is looking like a bottom in the dollar. Now, I wouldn't necessarily go out and buy the bottom or the top in these markets, because there are markets you can trade which are not bottom or top picking, such as a US dollar CAD, which we'll look at. However, I would be wary of being short dollars going into next week with stocks starting to break down, because it does look like we're probably going to get a short covering rally in the DXY. And this is backed up as well by what we're seeing in the scorecards, going from -1 to 0 on the 4-week forward-looking probability score. So the US dollar, I am kind of bullish on it, but I'm bullish in the sense that I expect this to snap back, rather than this being a market which is kind of trending to the upside. Next is the euro. Now the euro traded into the 1.06710, which I highlighted was the 4-year breakout. So really what we've had is we've had a breakout of a 4-year range, a pullback, and currently a retest. Now, this is exactly the kind of area where if you were going to get further declines in the euro, you would expect that to happen, because it's a major breakout and a retest. So based on where we are in the euro, this does also fit in with what we just looked at in the DXY, potentially bottoming next week. But again, you don't necessarily want to go and pick bottoms and tops. And in a risk-off environment, if the euro sells off, you can still see it outperform the Aussie. You can still see it outperform the Canadian dollar, because those markets will sell off faster in a risk-off event or a risk-off environment. So you could have the euro selling off next week and still rallying against the Australian dollar and the Canadian dollar. Next is the pound. This has been really strong after the flash crash down here, and we have came up and we tested previous highs. We just missed the target, but again, this is now really looking like a market that's running out of momentum. And as this happens, as this lack of momentum continues every time it tests the highs, this causing people who are sitting on profits to get itchy fingers and cover their long positions, and that is what ends up causing the reversal. So again, this is kind of at the top, and I would still favor the pound versus the Australian dollar and the Canadian dollar, but I would not be surprised to see this selling off and these longs start to capitulate if we start to see stocks selling off harder and risk off coming into the markets. Next is the Swiss franc. We came up and took out the target set last week. And the main takeaway here is not so much the next target, which we're quite close to. It's this major double bottom in the Swiss franc. And I highlighted to you that this was actually a major breakout. We came up, tested the top. We then consolidated, and now we've started to break out. If you zoom out here, you can see that this is potentially the start of a much bigger move up in the Swiss franc. And this is also confirming incoming risk off, and actually confirms that breakdown that we looked at, not just in the US stocks and the S&P 500, but the global equity index we looked at the beginning of the video. And this is not new from last week. This is something we've been tracking in the weekly Forex forecast for a number of weeks. Next is the Japanese yen, also the safe haven asset you would expect to outperform in a risk off event. And we have seen big moves up. Short covering rally after the big sell-off we've had all year. We've come back, we've retested the breakout level here of this minor inverse head and shoulders. And now it looks like this is trying to break higher. And again, this is exactly what you would expect to see, an outperformance of the yen in a bigger risk-off move. So again, another safe haven currency, which is confirming that breakdown we looked at in stocks. Next is the CAD. The CAD is resolving a bear flag as it currently stands, and I am looking for the previous low in the 0.70880. We've highlighted this in previous videos, and this is a market I expect to continue lower. Aussie dollar, huge bear flag in Aussie dollar. We really came back and tested the low over here, kind of broke above it, and now we're struggling, failing with momentum, or rather a lack of momentum. And again, this is indicative of a reversal because anybody who's long is going to be wanting to start booking their profits, and that's what causes the bigger snapback. And so again, this is something you'd expect to see in a bigger risk-off move. You'd expect to see the Australian dollar selling off harder than and underperforming pretty much all the other markets. Next is the New Zealand dollar. Now, I highlighted in last week's video why the New Zealand dollar, this rally was so out of the ordinary and how it's unlikely this could be sustained. And last week, it does look like we put in a double top. And I am looking further declines now in the New Zealand dollar. And if we are going to get risk off coming in with the stock market continuing to sell off down to the lows, this is going to catalyze the next leg down in the New Zealand dollar, which we've been waiting for quite a long time, vis-a-vis the Swiss franc, the yen, etc. Okay, so let's look at the markets themselves, starting with crude oil. Crude oil has been a very good short recently, and it is highlighted as the best short, in fact, in the commodity sector that we look at. And last week, there was a really good short-term trade here in crude oil. But what I do think is this consolidation correction is likely to continue. Any pullback once again next week is going to be viewed as another opportunity to look for shorts, potentially down to the 67.90. Next is Aussie yen. Now, Aussie yen is my favorite market heading into next week, and we have to look at this on the daily chart because it's the bigger picture that you need to be paying attention to. This is a market I've been banging the table over and saying, look, this is signaling potentially a big incoming risk-off move because this is the risk-on, risk-off pair, essentially. Aussie being one of the most sensitive to risk-on, or in other words, the most risk-on currency, and the Japanese yen being the most risk-off currency. So this is now breaking down with momentum towards the 90.834, and this was a fantastic short from last week, and the opportunity to really get involved with this before the break was last week, highlighted in last week's video. However, for anybody not yet involved, any pullback next week for the break up towards this area, that would probably represent the final opportunity to get involved to the short side before the break of the 90.834. And I personally am not looking at booking my profits at the 90.53, although that's the next target to the downside short term. If we break the 90.834, this is potentially a major reversal in Aussie yen, and I would be looking for this to actually break both these levels with momentum. That would be a sign that this is a real reversal if we get that capitulation to the downside below the 90.834. So keep an eye out for Aussie yen because we're very close to that level now. Next is EurAud. Took out the 1.58390, which was the target from last week. Going into this week, big momentum upside reversal after this kind of double bottom down here. And momentum precedes price, so I am looking further advances in this market. Any pullback, any consolidation is viewed as an opportunity to start to look for bullish entries. into the 1.6195. Next is Aussie franc, came right down to the target highlighted last week at 0.6208. Any pullback in this market next week is simply viewed as another opportunity to look for shorts. Really nice momentum down to the 0.6150. Another market that will certainly outperform, in other words, to the downside sell off in the event that stocks continue to sell off next week and in subsequent weeks. So we get that risk off coming into the markets. And the final Aussie pair is Pound Aussie. Now I prefer the other three markets highlighted here because the Swiss franc, the euro and the yen will all outperform the pound in a risk off environment. So I would rather be long those vis-a-vis the Aussie, but Pound Aussie is still structured to the upside. It is highlighted in the scorecards as a viable long opportunity. Any pullback is viewed as an opportunity to look for a breakout in this market. I'm going to be looking up towards the 1.8508 as the next key resistance to the upside. Next is CAD yen. Now you may be saying, well, why do I prefer the Aussie pairs over the CAD pairs? Well, because if we are going to get a bigger risk off move in stocks, the Australian dollar actually tends to underperform the Canadian dollar. And the Canadian dollar has been so extended and selling off so hard. You see in the scorecards, it's actually at -4 for the majors, that there is a chance that it corrects a little bit next week before continuing to sell off. So for those reasons, I do prefer the Aussie pairs, but any pullback in CAD yen is simply viewed as another opportunity to look for shorts into the 97.80. Next is EurCad. So similar to CAD yen, I would probably like to see a pullback first because we're quite extended here, but any pullback next week is viewed as an opportunity to look for bullish setups up towards the 1.4629, and EurCad again would benefit from a risk off or a continued sell off in stocks. And the final pair out of my top 6 that I'm going to be focused on next week out of the majors is CAD franc. This has been a really nice market to the downside. We took out the target last week. Any pullback in this market is simply viewed as another opportunity to look for bearish reversals down to the 0.6747. And the final CAD pair is Pound CAD. We took out the target set last week at the 1.68280, almost at the pip. And coming into this week, we started to pull back. So again, any continued pullback, I am going to be looking potentially, although again, I prefer these three markets. This is a market you can look for outperformance in a risk-off environment, and any break to the upside is viewed as a potential opportunity to look for longs into the 1.7017. Okay, so let's have a look at the dollar pairs, starting with euro dollar, pound dollar, US dollar franc. These three are in purple because in terms of trading, if you're going to trade them with dollar strength, you're essentially picking tops and bottoms. So the Aussie dollar and the US dollar CAD pairs are probably going to be your best bet if you want to trade the dollar. However, I still want to look at euro dollar, pound dollar, US dollar franc because it gives an overall picture of what's going on. You can see in euro dollar, we tested the 4-year breakout, and we're lacking momentum in this kind of sort of ending diagonal kind of pattern. You can see here we kind of overshot, and this is kind of contracting into a point. Now, very often you get this just before reversals. Doesn't necessarily always precede major reversals. You know, you can often see this pattern resolving. In fact, the target for this pattern tends to be the start of it down here, this level here. At least, you know, even if it's going to continue higher. But in this case, if you put everything together, what we're looking at in stocks, what we're looking at in the major safe haven currencies, it is indicative of a risk-off move, and I would not be surprised to see this be the top in euro dollar. We also have a large outside daily candle reversal from the ECB meeting. And that's not surprising when you consider what I said at the beginning of the video, based on the fundamentals, that the EU is going to go into a recession before the US, and therefore they are going to have to blink first and actually smash rates down before the US does. That is fundamentally bearish for euro dollar. Next is pound dollar. Again, we came very close to the target, and it does look like we're setting up for a double top. Now, the best position into this would be if we break down lower, because we haven't yet broken this trend, but if we break down lower and then we start to put in kind of a lower high over here, that would be the next best opportunity to get short in pound dollar further declines. As it stands, it looks like this is going to roll over, but it's picking a top still at the moment because the uptrend, this counter trend move, is still intact. US dollar, Swiss franc, pretty much the opposite to what we just looked at in the euro, lacking momentum with this kind of ending diagonal pattern. Bit of an overshoot down here, and then we're snapping back. So again, I would not be surprised to see this reverse. The target is the 0.95980, but if you do buy this, you are kind of picking a bottom in this market, and you're also trading the dollar against quite a strong currency in the Swiss franc. So I do favor dollar strength next week. I do think there's a very good chance we reverse. But if you are going to trade dollars, it would be Aussie dollar and US dollar that I think are the best, because they're both the weakest currencies vis-a-vis a stronger dollar. So the first dollar pair I would be interested in is Aussie dollar. Again, look at the lack of momentum up in this area. This does now look like it's starting to reverse. And again, if you were to go long dollars, even though they're kind of neutral versus the Aussie, and let's say the dollar didn't strengthen, it didn't go anywhere, you'd probably just see this market correct, in which case you're not going to be on the wrong side. You're unlikely going to be on the wrong side of a bigger losing trade. It will just go nowhere because your weak dollar is matched with a weak Aussie. So that's why I like these two. It's not just for profits, it's also to avoid being on the wrong side of bigger moves. So going into next week, any break higher, I'm going to be looking for this potential head and shoulders down to the 0.6493 near term. But I do think Aussie dollar is now making its way down to the low over here towards the 0.6100. And the final dollar pair, US dollar CAD, you can see we are starting to trend to the upside. And so any pullback in this market is viewed as an opportunity to look for longs into the previous high at the 1.3209, and in my opinion we could very well break through here once again with momentum. So wrapping up here with New Zealand franc, you can see we took out the major key area of resistance at the 0.60140 and we double topped. We confirmed that below here. So although the New Zealand is not one of the weakest, I do think we could now start to see this rolling over, and since we confirmed the double top, keep your eye out for a potential reversal here next week, because if we break lower, this is where we could see capitulation coming in. And it has been my opinion, as you all well know, who have been following the channel, that we are still likely coming down to the 0.5512. Okay, so wrapping up the video with gold, silver, and Bitcoin. Starting with the gold-silver ratio, you can see we are trending to the downside, and I've been favoring silver over gold because of this. However, we're starting to lack a bit of momentum, and in risk off, you would expect gold to start to outperform silver. So I do question whether we're going to snap back a bit, but I don't have a strong bias one way or the other when it comes to gold versus silver. Okay, so starting with gold, and you can see neither of these are highlighted as some of my favorite pairs. Why? Because we're right at a key area of resistance, and if the dollar now starts to rally from that kind of ending diagonal pattern, as I think it will based on risk off as stocks continue to sell off, this is going to push gold lower. But you're in a situation very much like euro dollar, pound dollar, and US dollar franc, where if you short gold here, you're kind of trying to pick a top, because as it currently stands, the reversal, the confirmed double top here would be below this low over here, and therefore you're still right at the top of this move. So I do think gold is likely to sell off. The next target to the downside is a 1681.76, but on balance, you are jumping in a little bit early. You're anticipating that reversal in the dollar if you short gold here. But I wouldn't want to be long gold either, because we're at resistance and the dollar looks like it could be set for a short covering rally. Next is silver. We took out the target set last week at the 24.052. Heading into this week, if I scroll out a bit here on the daily chart, you can see we've pulled back and retested a major breakout. Very much like euro dollar, this is exactly where you would expect to see a market start to bounce. And when you put that into context with everything else we've talked about in terms of risk off, including the dollar potentially having a short covering rally next week, I would not be surprised to see silver topping out in this area and starting to break down towards 21.70. Again, not on my best opportunities list, because as it stands, we're still at the top here. We're still trending to the upside near term. So I would really like to see a reversal in gold and silver before getting really bearish on these markets. And last but not least, we have Bitcoin, highlighted in gold because I do believe now this is set for further declines. We've pulled back in Bitcoin after a period of consolidation, retested the prior lows, and you can see we've started to sell off. So any pullback in this area, I'd be looking for this right shoulder, and this would be an opportunity to start to look for shorts down to the target set at the 14,858.30. So that is it from me for this week, guys, and also for this year. Thank you so much to everybody who has liked, shared, commented, and subscribed to the channel so far this year. We will be back on January the 7th for the first weekly Forex forecast of 2023. The only thing left to say is Merry Christmas, Happy New Year, and I will see you all in the new year.